Hello, this is Jordan, and this is your Precious Metals Video Market Update. This video is being recorded on the late evening of Thursday, April 12th, 2018, and in this video I'm going to discuss the current setup in gold and gold stocks. And starting off, we're going to take a look at how gold is performing in real terms, because the last video I did, which was 3 or 4 weeks ago, I talked about how gold really needed to strengthen in real terms if it was going to break out. And what we've seen since that last video is gold has strengthened in real terms, and especially with respect to gold against the stock market. At the bottom there, I have gold plotted against the NYSE. I mean, that's a bigger, more broader index than the S&P 500, so it gives a more broader look as far as the relationship, gold against stocks. And what we see there is that gold, that ratio has broken out of a downtrend. And another important thing to note, the 200-day moving average there, which it's difficult to see there with the highlight because 200-day moving average is right on the downtrend line. But that 200-day moving average, the slope of it is starting to turn up. So over the weeks and months ahead, if we can see this ratio just continue to stay above the 200-day moving average, maybe in the short term it digests the breakout a little bit, because maybe the stock market will recover a little bit and gold's not going to break out yet. But even if that happens, as long as the ratio stays above the downtrend line, stays above the 200-day moving average, that would be a good sign. So there's a good chance we have seen a significant turn in this ratio, gold against the stock market. But the real confirmation is going to be when we see it make that next move higher and take out the 2017 high, which in this ratio is just below 0.12. The ratio is trading at 0.11. So the 2017 high in the ratio was in looks like the very beginning of September, the very end of August. So when we see the ratio go above that point, then we'll have full confirmation of a major turn. But things are looking good at this point. And gold against foreign currencies, a couple days ago when we had that move to nearly 1370 in gold, that downtrend line, as you can see there in the top chart, that actually broke out. But the next day, we obviously had a decline, so there was no follow through. So for now, that looks like a failed breakout. But nevertheless, even if you go back a week ago, it's something I noted in my premium service, that ratio was testing resistance last week before it came back again at the end of last week and early this week. So we are seeing good signs there. But honestly, I mean, when we see the next sustainable advance in both these ratios, that will probably coincide with gold breaking above 1360 or even 1370. So continue to keep your eye on these charts, because these charts are going to tell us if gold is going to break out, immediately or in the next month or two, or if it's going to take longer than that. Now let's go to the stocks here. These are daily bar charts, and what we have here are charts of various junior ETFs or junior indices, and then at the bottom we have gold. So from top to bottom we have GOEX, which is the exploration stocks ETF. We have SLIJ, which is the junior silver stocks ETF, and then we have GDXJ, which of course is the major junior index or ETF that everybody tracks, and then at the bottom there's gold. Now, if you look at what's happening, at least in the top three charts, we've obviously been trading in a range, but I mean they've been compressing, so the range looks very tight now. And I mean, I think for those top three charts, I mean, we could possibly see breakouts in the next. I mean, it's possible we could see a breakout in the next week or two, but I think at some point at least in the next 4 to 6 weeks, we have to see a break one way or the other. Because there's not a lot of room on both sides. And another thing to look at with the top three charts, it may be difficult for you to see, is the 200-day moving averages. So the 200-day moving averages are resistance, and if you look at SILJ, the 200-day moving average is right in line with that downtrend line. With GDXJ and GOEX, the 200-day moving average is a little bit below the red trend lines there. But that's also important resistance to keep in mind. So what we really want to see, out of these indices is a strong move above resistance and a break above the trend line. And I think that that type of move is likely to coincide with gold breaking above either 1360 or 1370 to 75, the 2016 high. So we are, in the past, I mean, I have said I thought the break would not come until summer, and that still could be right. We obviously can't predict the future. Nobody really knows. But when we look at these charts, we see that the breakout could be closer than I thought. And as far as gold, maybe it needs to test 1300 again before it breaks out. I don't know. It has support at 1325, so if it tests that, let's see how it acts. It's possible it could just do a quick test of 1300, shake some people out, and then come right back and break out. Or we could see more continued tight consolidation from perhaps 1325 to 1360 over the next several weeks. Now, my last chart here for you, this is the weekly candle chart for both GDX, which is on top, and GDXJ, which is below. So we kind of have a zoomed in weekly view. Normally we show the 5 or 6 year chart. We can see the beautiful bullish bases. But here, let's zoom in and focus a little bit more on the here and now. Now, the key resistance for GDX is 23, which I believe it almost touched, or it may have touched earlier this week. So a weekly close above 23 would be a really good sign for GDX. And for GDXJ, that weekly resistance is right around 33. Then we also have the trend line here, which comes into play, the downtrend line. That comes into play around 34. So again, there's really not a lot of room. I mean, GDXJ has already bounced off of 30 multiple times. I mean, the action in February and March, I mean, just look at GDX in February and March. And in February, it tested 21, and then it tried to test 21, or it did test it for 3 or 4 weeks in a row. So it's really hard to make the case that GDX is going to go below 21 or GDXJ is going to go below 30. I just see it as very unlikely. I mean, the bearish or the more neutral case would be that the miners are not ready to break out, and maybe they're just going to consolidate and trade in a very tight range, maybe go a tiny bit lower over the next month or two. So, I mean, that would be the neutral to bearish case. I mean, the bullish case here is, I mean, I've already laid it out. I mean, it looks like the lows are in, and look, if we get a weekly close above 23 in GDX and 34 in GDXJ, after that happens, you're going to see momentum really start to pick up. Volatility will increase. And another thing which I'm not showing here is breadth indicators for GDX. I mean, the advanced decline line for GDX is showing a little bit of a positive divergence. I have my own breadth indicators that I use for 50 juniors that I track, and that's looking slightly more positive than the index itself. So all in all, I mean, things are looking bullish, and I mean, we've been talking about it in our videos over the last year. I mean, this market is going to break out at some point, and that breakout move, it's been put off for such a long time. But who knows? There's a chance that it could happen sooner than we think. We think it's more likely to happen in the third quarter, but given everything that I've told you here today, it's possible this breakout could come in the next couple weeks, or again, who knows? Maybe it'll come later in the middle of the summer, or later in the summer. But it's clear that the technicals are shaping up really well for the sector, and it's time. If you're not already invested, it's time to be invested, because you don't want to wait for the breakout move, because the stocks are going to move really aggressively by the time gold gets to 1400 or the low 1400s. You'll see some very strong moves in the stocks when gold does make that breakout move. So you don't want to be chasing that. You want to get in sooner rather than later. And again, you can follow all of my work at thedailygold.com. You can consider my premium newsletter, which is only $150 for 6 months. That's at thedailygold.com/premium. And I focus on market timing and then stock selection in the juniors. And if you really want to know which juniors have the goods and the best potential, consider signing up for our service. It's highly affordable. We have great industry sources, so we know and learn which companies really have potential, which have the good projects, and which are just mining the markets and don't really have the goods. We did put out a flash update earlier today. We have a new buy. It's a Junior Explorer. I think very few people are covering it. It looks very undervalued. There's obviously some risk there, but this is something that we think has 5 to 10-fold potential. And we're doing our best to try and find as many of those stocks that we can, but there's not many out there. So we get excited when we find something like that. But I want to thank you for listening and watching this video, and I look forward to publishing another video update for you in the weeks to come.